So, welcome to another Edgewonk review, and we have a fascinating journal, a review that we have not seen before, or what we're going to see we have never seen before in all of those years. So, it's going to be interesting, very different. Yeah, Moritz, you want to talk about what we see here, maybe on the broader scale?
Yeah, I mean, if we look at the equity graph, the small equity graph top left, we can see that overall this guy is making money, and it doesn't look too bad actually, in the broader scale. But if we look at profit factor, Edgewonk score, for example, win rate, also quite low. The only really good thing he got going for him here is the average P&L. And that is really good. I guess he has a standard target here of 2 to 1 that he always goes for, maybe. I don't know, but a 2 to 1 together with 40% win rate is pretty good overall. Now he only has to keep that up for a little bit longer. So then his profit factor should increase, his H1 score should increase, and then he's actually doing pretty well. But as we saw in other parts of the channel, there is a small problem.
Yeah, and a fascinating one, actually, an insight that we have not seen before.
hmm
Yeah, the over time, the profit factor is somewhere between 1 and 2.4. Yeah, it's finding its average around 1.5. So that's good. Yeah, that's what keeps them profitable. So we looked through all of the different um, tabs and data points as we normally do. And then we stumbled on the performance by time. And we look at the weekday performance. Really fascinating. So obviously, this is a crypto trader. He trades crypto all week. And this is quite interesting, right? Monday, Wednesday, Thursday, Friday, he's not profitable. Tuesday, he's making some money, but overall, if you just take the weekdays, Monday through Friday, he is then a net loser, as we see here. And I reached out to the trader to get some more context on the journal. And then what we found out that he has a day job, and his normal trading times during the week is after 9 p.m. Before that, he's at his job, he's working. And then when we look at this data, it makes a whole lot more sense, right?
It's quite obvious here that A, this guy is a day trader, B, he has a day job, C, he trades after his job, not in the morning before the job, that would actually be better, and D, that on the weekend, when he has a lot of time on his hands and isn't stressed by his day job, then he actually starts making money. And that's, I mean, there are multiple solutions here for this guy. A would be to simply don't be a day trader if you have a day job. That is actually probably the biggest takeaway here. B, if you really want to be a day trader with a day job, then you're lucky that you're a crypto bro because you can trade the weekend and that's where you make the biggest chunk of your profits. So, during the week, if you are stressed from your day job, you come home, maybe you go to the gym, you are super tired, and then you sit down to trade. It just doesn't work for most people. At the end of the day, you're spent, and then you have to like focus on day trading. That is way too brutal. So, just become a swing trader, or if you really want to be a day trader, then you should be trading on the weekend only, is what I say to this guy.
Yeah, especially after he said his normal trading times during the week should be 9 to midnight. So he comes home late, maybe he's working and then goes to the gym or does some sport, but he's starting very late and then he has 3 hours after probably a demanding day job. Trading then at a high level is just not feasible. And that's what you see in the data. Weekday,
Yeah.
we can look at the performance, right? We open the day filter. Let's just look at Monday through Friday. And he's more or less break even, but probably he's also not trading at his best.
He also said that a lot of the trades that he takes during the day, they are like trades from his phone that he does while he's at his day job. I would highly advise against that as well. If you don't have a really, really good process, for example, you make your watch list in the morning, you set your alarms, and then when your alarm goes off, you quickly find a quiet spot, a meeting room, or rip out your iPad or your phone to execute. That would still be doable, kind of. But if you simply play around on your phone, taking trades during the day, then you're frustrated because you lost money during the day. You come home in the evening, you're tired, and now you sit down and you want to really trade or make up for what you did during the day. None of that really works. It's just it's the desperation of someone that doesn't have a lot of time on his hands and maybe really wants to get out of his day job. And that's why that person thinks they have to trade all the time to make that happen faster. But it couldn't be further from the truth.
Yeah, and I get it at one point because you want to be a trader and then only trading 2 days per week could feel kind of strange, right? But if
Yes.
we just follow the data here, the data clearly shows that this is not really the way to go, and we can see it here. Those are his weekday trades. Probably here, still at work, he's having a good time, giving it all back. And then just before going to bed, he's losing a bunch of money. That's also not the best way to wrap up the day because it's going to carry over into the next day, probably. It will make you not feel great if you take a lot of losses before you just go to bed. So it has a lot of negative spillover effects. If we look at Saturday and Sunday only, yeah, he's trading profitably, right? So here, although it's a very small sample size and before trade 11, it's more or less break even. But again, if you maybe on the day before or you're just trying to dig yourself out of the mental hole from the week, probably a lot of negative spillover effects into the weekend. But it clearly shows the data. Although again, the sample size is not really large, it shows that this is probably the way to go for this trader. Suddenly, all of his stats improve quite a bit. Higher win rate, better reward to risk ratio. Yeah, well, excellent profit factor. Obviously, a little bit skewed due to the last few trades that were really good, but the data shows that this is where the trader's focus should be here.
And on the technical side, we didn't find anything actually. And that's the really interesting part here. I mean, there's always the trade management graph, which looks okay. You know, the risk distribution looks okay. Um, Now, even he's trading a couple of setups. All of them are kinda okay. Of course, there's one setup called EVAs in German, which means something. So maybe don't take those anymore. But besides that, I think the technical base of his strategy is probably not bad. Yeah.
Yeah,
And
especially here if we only look on the weekends, suddenly, even there was the big loss, the big loser
yeah.
throughout the week. Now it's kind of okay, just one trade can easily be turned around. So his systems at the core seem to have an edge,
Yeah. Yeah.
which is great news.
Yeah, it's really great news for this trader, and he just has to make a decision now. You could also try, I don't know, if you really want to get out of your day job, you could ask your boss whether you could do maybe 1 or 2 days home office and then focus more on trades. Obviously, that's not don't let your boss know, but that would be one solution, for example, if you really want to be a day trader or only trade on the weekends or become a swing trader. That's the three options you have right now, in my opinion.
Yep, super interesting. Very different from what we typically see, but there's a lot of those types of traders out there who have a very demanding day job, maybe don't even have a chance to work or to have a home office. Maybe they work somewhere without a computer. And then for those traders, probably the equity graph and the data is going to look very similar to what we see here. So really, really insightful, very different, but very relatable probably to a lot of other traders. So thanks for sharing. Thanks for stepping forward. And hopefully this trader gets some insights. Again, we are happy to do a follow-up review in a few months. So reach out to us once again, and we are very happy to do another review.